Great. Hi, everybody. So welcome to this session. I'm here with Julian at Bitstamp, as you already know. We're going to be discussing how the financial services ecosystem is evolving in reaction to crypto, with crypto, and digital assets as well. Of course, it's not all about the currencies. But we've kind of been talking a lot today and recently about the world of decentralized finance, which I guess is replicating the financial services ecosystem in a way, and also about shadow banking. There are now entire networks of lenders, brokers, intermediaries that all operate outside of what we would call traditional finance. What do you think is kind of happening there, and what are the consequences of that ecosystem developing in tandem with traditional finance?
I think this is a really interesting journey which we're going on, and I think if you look at this from a regulatory perspective, DeFi is outside of the remit of a lot of the regulators. But it's still relatively small. I know it's growing really fast, etc., but it's still relatively small compared to the rest of financial services. There will be a point where the regulators understand, want to control, want to manage around AML, KYC, regulations, etc. And I think that's going to be really interesting how the DeFi world fits into traditional financial services. Well, where we've seen crypto over the last few years getting closer and closer to traditional financial services in terms of how they are regulated, controlled, and managed, it's going to be really interesting how DeFi moves into that direction as well. It can't sit completely outside of the financial services world and be of significance in size and scale.
But isn't that kind of the plan and the dream of digital assets, is that we might have this world one day where everything is decentralized and you don't have to go through big intermediaries like a central bank?
Yes, but the world also has need to do AML, KYC, counter-terrorism financing, etc., which is absolutely critical to do that. So this is where it becomes really interesting. How does that world fall into the traditional world and vice versa? So there's going to be a challenge. But we also need to look at where protection comes in for consumers in particular, as well as corporations. So how do we ensure that people understand the problems and the risks? And you have a set of as new financial services products come in, you have that level of maturity. And I often talk about credit cards. I can't remember when they came in the UK, but probably 1965 or something like that, with the Barclays card powered by Visa. But it took us quite a long time to 1974 before the Consumer Credit Act came in. That gave protection. That's the protection which we all know that credit cards are good for certain purchases. It takes time for the regulation and protection. I think if you look at if you're looking at sort of DeFi and some of the lending and products and things like that that are totally outside of that world, it is going to be really hard for that to grow to a state that the regulators are just going to say, that's fine, you stay outside of those controls. And if we look, and I expect we'll talk about what's happening in the Ukraine and Russia at some point today, but you look at all of those constraints, and it is absolutely critical that we play the right role within the ecosystem.
And so what is Bitstamp's role in that? Obviously, there are certain products now being offered by crypto exchanges where you can offer things like yield and lending and staking with DeFi. All of these are kind of mimicking traditional financial services. Where is Bitstamp going to move in that world?
So we play in that world, but we play in the world where we have got and I'm sounding like a stuck record after 5 minutes already, but we play in the world with regulation and with compliance. And so therefore, any customer that onboards with us has to go through the bank grade AML and KYC requirements. That is critically important to make sure that we are providing that reassurance and protection to customers. And that is where there is a rub between these different objectives within these different product sets.
Because presumably those kind of products will become even more enticing, especially given the interest rates they can offer in a world where right now interest rates are like bottom low. Yep. How do you kind of see that progressing for you as a business? Do you think it's going to become a real advantage for the crypto ecosystem in time if they can offer more attractive rates than traditional finance can?
I think in the medium term, you're probably going to get them narrowing the delta. You can obviously go to the high street bank and put your savings in and get, as you say, a few pennies interest rate. But you can also go to other higher yielding products, but has higher risk. What I think we as an industry have to do is look at how we educate consumers to make sure they understand the risk profile that is being undertaken here. And that is a maturity for us as Bitstamp, but also the industry, to make sure we are communicating and providing that. Because, a 5% return or an 8% return is incredibly enticing, but do you understand the underlying risk there? And that has to be communicated well. And I don't think we as an industry are doing that well enough.
Call to arms, I guess. Well, actually, so you mentioned sanctions earlier and Russia's invasion of Ukraine, and that's one place where authorities and regulators are really starting to crack down, particularly in Europe as well, because it's really an epicenter for that. Why do you think it's important that crypto exchanges like Bitstamp or other intermediaries are able to monitor and sufficiently see what is going on when it comes to sanctions and sanctioned entities? Because obviously privacy is also a very big part of this ecosystem.
Yeah, it's a very, I'm probably going to give a fairly long answer to this. First of all, Bitstamp and obviously a whole range of other exchanges are 100% compliant on all sanctions. Absolutely, there is no debate and discussion about that. What we also have is bank grade AML KYC, but also know your transactions KYT. And this is really, really important to ensure that if there is different behaviors than what we would expect, we will trigger alerts and therefore review those transactions. And so it becomes really difficult to use it as a way of bypassing the sanctions. What we've also done, just to complete that, is we've reviewed all of our partners, we've reviewed all of our banks, we've made sure that we are not only compliant with everything, but also in the spirit of what is happening there. We are a very small exchange in Russia and also the Ukraine. And actually, the first few weeks of the conflict, we spent all of our time looking after our staff. We have a number of staff who are Ukrainian and helping them and their families. That's the important piece. So for us, I think it's a very easy headline to say crypto is a place where you can avoid sanctions. I don't believe that is true. If anybody is a sanctioned individual, they will not be on our exchange. Full stop. Therefore, we're talking about different behaviors of people who are not sanctioned, and again, we will block that. And I think this is where the industry needs to understand what is an exchange or a player within the ecosystem that is running at the top tier as a good actor. And CryptoCompare do an exchange review, and there's 7 exchanges who are AA rated. We are one of them, the only one in Europe. That needs to be communicated. That needs to be understood. What does that mean if you are AA, A, B rated, etc. And again, that is super important.
Because I guess the question to ask is how this might affect the industry's growth going forward if we're having this crackdown coming from regulators who perceive there to be a risk about sanctions, even if we're not quite seeing the evidence of that yet. And it's forcing some exchanges to have to kind of really beef up on that side. Also in tandem with regulation just coming in anyway, the UK is a very key base for that at the moment. We've had a lot of reports about regulation coming in the next few weeks. What will that do to the ability for exchanges to continue to grow at the rate that they've been able to so far?
So I think there's a perfect storm in that there is a huge demand from consumers to understand crypto and be engaged in that. There is a huge demand from financial institutions and corporates to be engaged in crypto, and the regulators. So the conversation is different than it was 12, 24 months ago, and that is really, really good. Some of the activities that's happened by the UK government, EU just voted on MiCA coming in a couple of years' time. President Biden did his executive order. All of those things start to have this as mainstream conversations, and we at Bitstamp are absolutely a regulatory first exchange. We think that's important. We think there is a lot more to do. We would like to have consistency in regulation. And particularly if you look at the VASP regime within the European Union, it is different in every country. That hurts. Not just it hurts us because we've got a lot of work to do that is different in each country, but it also means that some countries that we go, it's not a big enough market for us to apply for a VASP. And then where do those consumers go for crypto activities? They go to the bad actors, they go offshore, etc. And that is, that's not good. So I think from a regulatory perspective, a level playing field is good, but having these conversations is exactly what we want to have in the industry.
Yeah, because I know you're mainly a European exchange, but obviously you mentioned the Biden executive order that we just had. And while it wasn't the crackdown that everybody anticipated, and so on the one hand, for the crypto industry, it was quite positive to have something so broad and optimistic, at least, on crypto regulation. It was also quite vague. It didn't necessarily give crypto companies any more indication of how they should be operating now until things come into place. So what do you think more can be done in terms of clarity? I know that's a very big word in crypto ecosystem as well.
Thanks for that question. I think, so this is that maturity of the crypto market, of financial services. You know, what is important is that, you know, in the US, there are a whole range of different regulatory bodies that have some or no remit over this. What we would like is clarity. We would like to have clarity as to who is the regulatory body that we need to deal with and work with. And that is the same in Europe and in the UK. It's all about having clarity. Clarity means that we can plan. Clarity means that we can communicate to customers about the protection of their assets. And that gives, it takes away some of that noise, that clickbait of Bitcoin is bad or Bitcoin is for sanction busting, etc. Let's have that grown-up conversation and help the regulators and help the markets to where we all want to go as an industry.
At this point, I'll also point out we do have time at the end for questions. So if you wanted to submit any for Julian to answer, you can do so on Slido. I believe the link is over there, or if you're watching online somewhere, probably above my head. But if we kind of move on, I guess, back to the financial services ecosystem, you can't really talk about crypto and financial services without mentioning stable coins. Do you think that stable coins, private or otherwise, will ever really be able to truly challenge the dominance of fiat? The dream for CBDCs is that they might replace, you know, us using the dollar or the pound in everyday life. Same goes for Tether or Luna or any of the other ones that you might want to use. So do you think that's a possibility?
So I think we need to break this down. First of all, CDBC, stable coins, etc., is a total validation on the technology, the blockchain technology. That is good. What we've then got, and we're all at fault, including myself, in, you know, cryptocurrency is a whole range of different things. And so there are some assets which are, you know, speculative, which are going to increase in price or whatever. There are some that are stable coins which are absolutely for a different use case. And I think what's important is we've got to stop calling them all just cryptocurrencies, put them in one box and treat them very, very differently. So having CDBC is super important because it helps movement of money between major financial institutions. We already have that in the UK. RTGS is the system doing. If they're using with blockchain technology, great, super happy. It's just more validation. Does that mean that the Bank of England or the European Central Bank is suddenly going to offer retail current accounts? Absolutely not. They don't have the remit to do that. So, but if we can solve real world problems, and, you know, when you look at stable coin, you know, what are the problems with payments today? Cross-border payments, remittance payments, supply chain finance. Solve those things that are costing us as consumers and corporations money. That's got to be good. So we've got to eke those out. In my mind, there is a, you know, there's a pie chart of all the activities within financial services. Without a doubt, blockchain is going to play a major part in that, and cryptocurrency is a part within that. And there'll be then different slices between stablecoin, CDBCs, and other assets. So it's an evolving, and I think we should think less about having this as a them versus us. It is, we are part of an ecosystem. We have a huge amount to play, and it is obviously super exciting industry to be in, but we've got to then work with the rest of financial services to see how we can solve real problems.
Yeah, because I guess part of the conversation is about this whole mix of private and public and how you could really integrate that seamlessly if that's at all possible. Because, you know, a lot of the biggest stable coins are under private management. They've had issues in the past about not fully disclosing their reserves, or really just a lack of visibility about how these assets are run. How do you think that can improve in future, and do you think regulators will ever be fully on board with it?
Well, I think, you know, you've got to look at this as to how banks operate. And having, as you know, been in the startup bank at Starling, you know, as a current account or checking account, you can withdraw all your money today. That doesn't mean the money is always available in the bank because they invest in other gilts and things like that. But there is a pattern of understanding how much money needs to be available on a certain day and a certain month, certain year, that you can withdraw your salary and go and spend things. What we've got to stress test with stablecoin is, what does that pattern look like? And that produces then models that the regulators can understand, as well as the providers of this, to understand, well, where is that paper? Where is those dollars or those euros stored? How can we get that out? What we don't have is that stress testing of behavior behind those in times of volatility. The regulators need to look at this and are looking at it, and that is super important for that they understand that asset class that is different than a Bitcoin, that's different than smart contracts, that's different from some of the other things. So again, I don't want to be a stuck record. It's about the maturity and about understanding that stablecoins have an absolute role to play and will solve real problems in the banking system and the payment systems. But it is about, we need to have that reassurance around that.
So we've had a pretty good question come in already about decentralized exchanges, which is almost like what we were talking about at the beginning. Do you see decentralized exchanges as direct competitors to centralized exchanges, and can they coexist in the future? We've even, if you think back to yesterday with the hack that got experienced on the Ronin Bridge, decentralized exchanges were one of the places that the attackers went first before going to centralized ones. And it's obvious that this dichotomy is definitely causing some tension.
I mean, I think there is you can see an ecosystem where they both exist, okay? And there's pros and cons for both of those. But I think this goes to trust. And that trust is, if you are exchanging one asset for another, don't you want to go to a counterparty that you understand that is going to be there, that is going to honor your purchase or your sale of your assets? And that comes from centralized exchanges where you have got that trust. You may want to use decentralized for some things. They could be super interesting. But where are you going to put your money? You don't keep your money in a cardboard box at home. You put it in a bank, because that gives you that trust and that reassurance. And that becomes important. And that trust is a whole range of things. It is regulation and compliance and sanctions and all the other stuff that we've just been talking about today. It is also about uptime. So can you guarantee that when you want to buy or sell your assets, we are there, we are available for you? Our uptime is market leading. That's important. And when you've got a stock, an asset which is highly volatile, you may want to do something that second, that minute, and if the exchange is down or the service not available, that becomes an issue. So I think it is important to understand that there is a huge trust element that comes from those centralized exchanges, which may change how much you would use a decentralized exchange if needed.
Right. Well, I think that's all we've got time for, actually. So thanks for joining me on the
stage today. That was very quick, actually.
Yeah, exactly. I'm being told it's time anyway. Yeah. So hopefully you all enjoyed that as well. And I think we'll both be around all day. So
indeed. Thank you very much.
See you then.
Thank you.
Just a quick one to say that I think now is lunch break. And so you can make your way up to the main exhibition hall where you will find food, and we'll see you back after that.